Chip giant Broadcom just released earnings for their first quarter. Let's take a look at what came in. Broadcom saying adjusted earnings per share did beat estimates. Adjusted net revenue coming in at $19.31 billion. The estimate had been just below that at $19.26 billion. Semiconductor solutions revenue coming in at $12.52 billion. The estimate had been lower at $12.31. Broadcom sets new share buybacks up to $10 billion. Let's go through what those results mean. Christopher Davis, partner at Hudson Value Partners. Thanks for joining us today.
Oh, good to be with you, Morel. Thank you.
So revenue was a bit of a beat. How much of it for this company is chip sales?
The majority for their business is chip sales. Biggest customers are Apple at 40% of revenue, followed by Alphabet at about 12.7% of sales. So while this is predominantly a chip company, they do have a software business and a virtualization business in what they acquired from VMware going back a few years. And it was actually that enterprise software business that was a slight miss versus consensus in an otherwise, what I would characterize as a modest beat across the board.
What would you say poses the biggest threat to its chip business at this time?
Well, I think they're NVIDIA's biggest competitor, right? And the question is whether or not is NVIDIA going to be able to keep their prices up? And are the ASICs that they're developing for the likes of Alphabet, Microsoft, Meta, now ByteDance, OpenAI, these companies, are they going to really allocate more of their chip spend to the ASICs, to the Broadcom chips? If that's the case, I mean, their AI backlog from these ASICs is huge. But if the technology develops in a different way or NVIDIA prices come down, that's the real competitive threat right now to Broadcom.
Okay, we're taking a look at the after hours trading here, and the stock is going down. What would you say of the incredibly high bar these tech companies now have to reach for in an effort to impress investors? Is that bar too high?
I think it's not so much that the bar is too high, but tech investors suddenly are a little bit more disciplined about valuation. I mean, Broadcom, these are very solid numbers, very strong growth on a percentage basis. And the estimates from both the street and company guidance are strong for the next few years. But Broadcom is a company that's about 60 times trailing, 30 times forward. And their long-term multiple average is closer to that mid-20s 30 number, somewhere in there, which is reasonable for a company growing at this rate. But I'm not sure investors are going to assign that much multiple expansion from here on out on technology, given the risks.
Okay, so I'm taking a look here at what their forecasted revenue would be for this next quarter, which is $22 billion in a statement that they put out. And that would be above some of the estimates coming in at about $20.5 billion. So it's a company that's doing well. But obviously, AI has been beaten up. As you mentioned, part of that is valuation. What else could be dragging it down? Are they overspending on anything?
Well, I don't think Broadcom's overspending. They have some of the lowest CapEx. And I mean, you're looking at a $1.5 trillion market cap company that only has about $50 billion of net debt. So they're not being caught up in that same debt and spending frenzy as the other companies are. Those companies are their customers, in essence. But what I do think we want to hear from Hock Tan on the call, who's always very, very dynamic, is we want to hear how is this memory shortage affecting them. And the one thing that may be giving the chip companies a little bit of trouble right now is Qatar, with the situation going on in the Gulf, is responsible for about 20% of global helium. And helium is a very important component in semiconductor manufacturing. So if there is a global helium shortage that emerges from this, if this conflict is prolonged, that could throw a wrench in semiconductor earnings for all companies, not just Broadcom.
Will the Middle East conflict affect this and other AI companies in any other way? I'm thinking perhaps some of them have big contracts to buy from the tech companies, and I'm wondering if those could get distorted.
Yeah, my sense is that the Middle Eastern and the sovereign AI clients are not going to be pulling back in the least, particularly as they see how AI has been used in the conflict quite successfully. But I do think there are going to be some higher insurance costs on data centers in the Middle East, particularly with, I believe it was the Amazon data center in the UAE that was hit. And there could be some replacement costs and things that need to be built back up there as well.
All right, I'm going to leave it there then. Chris, appreciate your time. Thank you very much for joining us today.
Oh, my pleasure. Thank you for having me.